Thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be comparing the current move again with the one we saw in the last cycle. So if you guys like the content, please subscribe to the channel, please give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So one of the things we've talked extensively about, right? So to give you some just framework here, right, in case you're new to the channel, we've talked extensively about the 20-week moving average needing to hold as support, right, for a bull market to really take hold. Okay, it's not the only condition, right? We also want to see the golden cross. We saw that months ago. We also want to see that Bitcoin is above the 20-week to begin with, right? So it goes above it, and then it comes back down to the 20-week, holds it as support, and then continues its run, right? It's not enough for it to just go to the 20-week and then stay at the 20-week. We want to see it come down to it and then hold it as support. And in the short term, it seems like that's exactly what it's done. Obviously, Bitcoin is very finicky, and it could easily fake us out. But in the short term, it looks like the first test of the 20-week moving average seems to be a success, right? You see the wick down to the 20-week, another wick that even went slightly below, but the candles were all closing well above the 20-week moving average. Now, the reason why this is important is because we want to compare this to the last cycle when we first held the 20-week, right? So we've talked about this before, and we said that if we repeat the last cycle, what we may expect, right? It doesn't mean that it has to happen that way, but just to give you an idea of what could be coming based on the last cycle. So let's take a look at the last cycle. If we go back over here, you can see that this was the first time we held the 20-week back in January, February of 2016. And from then on out, we held the 20-week all the way throughout the duration of the bull market. Now, when you look at this, you can see that that first move, right, that before we held the 20-week came up to this local top. And we've drawn this before, right? If you go back and look at a video a couple weeks ago, we said, you know, what might happen, right, is if we go back down to the 20-week, which we did, right, once we got to the 20-week, you know, the next potential move based on the last cycle, right, just based on the last cycle, was a slower move back to the local top. So let's draw our accumulation range here. So this essentially is our lower bound at 380 and our upper bound at 450. Okay, now this was from the last cycle. And note, too, that the difference, right, the percent difference between these two is approximately 16%, okay? And it's obviously give or take. I mean, I could obviously move this down a little to encompass this candle as well, in which case, you know, it's closer to 18, 19%. But you generally get the idea, right? It's approximately a 20% percent difference between this price and this price. So the local top, the local bottom, local top, and then so on and so forth. Okay, so you see the trend, right? And we outlined this in a prior video. The general trend, of course, right, being we go to the local top. Let me change this color so you can see it. Let me change it to this one. Okay, so we went to the local top, which happened to be, you know, 450 or so last cycle. We hugged it for a little bit, right? Came down to the local bottom, right? Which happened to be 367 or so, 360, whatever, 370. And it also corresponded to the 20-week moving average, right? So the first time we came down to the 20-week, we held it as support. Down here, you can see this wick going all the way down to it. We then had a grind over the next few weeks back up to the local top. The next move down did not take us to the prior bottom. Instead, it took us back to the 20-week moving average. So the first test corresponded to our prior bottom and also the 20-week moving average, okay? The second test did not go back down to the local bottom, which would have been 370 or so. It actually held support at the 20-week, and in fact, it came back up to the local top, went sideways into the 20-week moving average, and then we broke out. Okay, so this is what happened last cycle at the beginning of the bull market, right? We don't know yet. We're not sure if this is the beginning of a bull market. I mean, for a lot of people, it would kind of seem strange to not consider this a bull market just because of how incredible a lot of the gains have been. But we're not talking about a short-term bubble, right? Short-term bubbles exist in crypto all the time. What we're talking about is a multi-year bull market, right? A paradigm shift in the way we think about crypto, a paradigm shift in the way we think about Bitcoin. What is a Bitcoin, right? What can it buy you? You know, back in 2011, maybe it could buy you lunch. back in 2013. Back in 2013, it could have bought you a little bit more. I mean, obviously, it depends on if you bought, back in early 2013, it would have been 145. The late 2013, it peaked, I think, at around like $1,100, 1140, something like that. And I mean, at that time, $1,000 can get you. I mean, it can get you a lot of nice things, right? I mean, it's not just dinner or lunch, right? It's like maybe a couch or a nice vacation or something. Well, maybe not too nice of a vacation, but you get the idea. Then in 2017, at the peak, a single Bitcoin is kind of equivalent to like a car, right? A $20,000 car. Now, what we're talking about now, right, is what will a Bitcoin be in the next paradigm shift? So the idea is not to form just a short-term bubble and then to go back down to 3K, right? What we're talking about is we're not talking about practice, right? We're talking about the game. We're talking about Bitcoin going to its new paradigm shift in the market, right? And in order to do this, it has to be more sustainable than a short-term bubble that's going to go right back down to like $4,000 or $5,000, right? This is not what we're talking about. So what we want to see, right, is this new paradigm shift in what one Bitcoin is. And in order to get there, it takes years of a bull market. It takes years to get there. The last one, if you go from say the bottom over here back at like 160, 170 or so in January of 2015 to get to that new paradigm shift, it took over 1,000 days. It took 1,064 days. Okay, this paradigm shift over here, from this bottom over here took to this local top, right? It took 315 days, and then this one took 749 days. So you can see that from going from bottom to top, each cycle it's taking longer, and it's because it takes a lot more volume to continue to push it up. The price curve, right? To go from $1 to $10 is a lot easier than to go from 10 to 100 or 100 to 1,000. And I should be talking about it in terms of market cap, right? To go from a market cap of say 10 million to 100 million is a lot easier than going from 100 million to a billion, or 1 billion to 10 billion, or 10 billion to 100 billion, or 100 billion to 1 trillion. Okay, so I anticipate the market cap of Bitcoin at the peak of the next cycle will probably be around 2 trillion, is my guess, with the market cap of the entire cryptocurrency asset class actually approaching 10 trillion at the peak, right? Plus or minus a few trillion. We all lay there at night wondering what's a few trillion among friends, right? So the idea, again, I mean, you see the increase. So the idea, again, if you go from say the local bottom, and let's just draw this out, another few hundred days, maybe another 500, 600 days, we're talking about 2023 to get to that new paradigm shift, somewhere between $1 to $200,000 per Bitcoin. Okay, so the way that we get there, again, is a multi-year bull market, not a short-term bubble. Now that we've talked about that, right, so we've looked at the local top here, and we identified, this was our re-accumulation range, right? Our re-accumulation range, we had a local bottom, a local top, a local bottom, a local top. This first local bottom after this 20% correction or so also corresponded to the 20-week moving average. Then we came back up to the local top, then back down, but this move back down was back to the 20-week moving average, not the local bottom. The reason I'm highlighting all this is to just draw similarities, right? To draw similarities between what happened back then and what happened today. It's not to say that it has to play out the same way, right? If you go back and look, we saw a lot of similarities between say this accumulation phase here and this one. This one broke up, but this one broke back down. But again, as we've said, you must always be ready for a drop to the 20-week moving average, even in a bull market, right? As we showed before, we get these 20%, 30% drops to the 20-week at any phase, at any point, right? You get them all the time, even in a bull market. So you always have to be ready for them. They're gut-wrenching when they come, right? Because it makes people question whether that's it or not. But ultimately speaking, throughout the bull market, we always held support at the 20-week moving average, right? We always held support there. So we go to present day, right? And we let's take a look at where we are present day, right? So in the same manner, we came up to a local top, right? The difference between this and this is also around 16 to 17%, which is the same, as we said, as this one, right? Around 16 to 17% or so, maybe 18%, something around there, depending on exactly where you draw the lower bound. So it's about the same distance. So the first thing is we came up to the top. We then came back down to the bottom of our local bottom, right, which corresponded to the candle that blasted through in our prior local top. So this local bottom is formed because it was our prior local top, right? So in the same manner, you know, if we zoom in, right, and delete some of this stuff, you can see this local bottom was our former local top. So it's the same idea. Okay, so then we came back down. Sorry about that. So the price of Bitcoin went to the local top, back down to the local bottom, which also corresponded to the 20-week moving average. Now, this is what we said in a video, I think about 2 weeks ago, right? We said, okay, if this is our time, if this is the time that Bitcoin holds the 20-week, right, then, you know, if this is the time and we repeat the last cycle, what we would see would be a slow grind back to the top of that reaccumulation phase, right? So we've already made it halfway there, right, to go from 10,000 to 11,000. Again, there's no guarantee that we're going to go to the top of the band, right? I mean, each cycle is slightly different. It's possible that we come back down from here and test the 20-week, right? This is always possible. But what we're saying, right, is if you had lived through the last cycle, you were probably experiencing a lot of the same emotions, right, that a lot of people today are experiencing. So this is what I'm saying. You know, a lot of people, we had the same emotions back then. It came down to the 20-week. We came back up. It was a slow grind back to the top. Now, if on the off chance that it does play out like the last cycle, and we do come back up to the top, and it continues to play out like the last cycle, right, then it would mean that we would then come back down to the 20-week and test it again, right? And then after testing it again, we would go back up to the top, and then maybe we would go sideways, right, until the 20-week moving average catches up, and then we break past 12K. So this would be if it's an exact replica of the last cycle. I'm not saying it is, right? I don't really know if it's going to play out the exact same way, but I just want people to be aware of you know, we can use these past trends to at least identify, you know, what has happened in the past, what is possible to happen this time, so that you're prepared in the event that it does happen, right? So remember, one of the things we've said too is that during bull markets, if you zoom out, they look like they're all fun and games, right? It looks like they're super simple. You just buy over here and then you ride that parabolic move up, right? But as we showed, there's a lot of 20 to 40% corrections back to the 20-week. There's also a lot of boring times, right? And there's plenty of these times. You can see, I mean, here was a pretty boring time where it essentially moved sideways for 189 days. Here's another time where it essentially moved sideways, you know, plus or minus maybe 10, 20% or so for 168 days. So we're going to likely see these very boring times of the market, even in a bull market, right, where it just moves sideways for a long time. And a lot of times it's moving sideways on the 20-week moving average, right? It's near the 20-week moving average when it tends to move sideways, okay? So don't be surprised if we go sideways for a while, right? And that would mean staying between 10 and 12K for a while, right? Not breaking out from 10 to 12K for an extended period of time, because we've also said that we anticipate this cycle taking longer than the last one, right? As we already showed, measuring from bottom to top, top to top, or bottom to bottom, you know, it's likely going to take longer. Therefore, you know, we're probably going to have, you know, these accumulation phases, right, that are going to last relatively long periods of time. I don't know exactly how long they're going to last. I don't know how long each one will last, or exactly how it'll play out. My point is that there are going to be phases during this bull run, if it is in fact a bull run, which, you know, I feel like right now during the market cycle, this is the best chance we've had so far, right? The last two chances where we came to the 20-week, we broke it almost immediately, right? We didn't even put up much of a fight. It was a small fight, right? We were there for a couple days or so, but we ultimately fell through. This is the first time during this cycle, coming down to the 20-week, we've actually seemed to bounce off of it a little bit. It does not mean that it's going to hold it, but it means that we're a lot more optimistic this time than we were the last two times, right? The last two times we just immediately fell through, and when we fell through the first time, it was straight to the 100-week moving average. The second time, it was straight to the 200-week moving average with a wick to the 300-week moving average, okay? So What we're looking for, again, we're hoping Bitcoin holds the 20-week. If it does, maybe, it's already significantly above it. If we continue, right, the last market cycle in the same manner, which there's a good chance we don't, but if we did, we would see a slow grind back up to 12K, and then maybe we hold it as resistance again, right? And then maybe we come back down and test the 20-week moving average, but then maybe we test the 20-week moving average at 10.5 rather than 10,000, okay, like we did a couple weeks ago. Again, this is a lot of speculation. There's a good chance that this does not play out, right? There's a really good chance that does not play out, and that maybe we hold resistance here, and then we oscillate in this window for a little while between 10 and 11K. But I just want you guys to be aware that even in a bull market, there's going to be these times where it gets boring, we're going to move sideways, and then eventually we push up to the next level, right? And I think the next level after 10 to 12K, the next obvious level, I don't think 13K is going to be that important. I think 14K, around the 14K area, will be pretty significant, that $14,000 level. If you go back and look, right, if you just look at the $14,000 level, if we say draw a line, it was this level. This was above this level, right? Was where these were these few candles we had where we had that new peak in the price of Bitcoin. So I anticipate the $14,000 level being kind of the new, whenever we break out of the $10,000 to $12,000 range, I think the $14,000 range is our next stepping stone, right? So we've talked about these stepping stones, right? Moving up 2 steps, and then here we move back a step, right? So 2 steps forward, 1 step back. So if we move back, we move back up to the prior step, and then the next step I think would be up to 14K. Okay, this is the general idea. So maybe something like we came back down to this level, so we would go back up maybe, and then whenever we go back up, the next level would be like in the 14K regime. Would be my guess anyways. So let me know what you guys think. What do you guys think? Do you think that Bitcoin's going to go to 12K? Do you think we're going to stay range bound between 10 to 12K for an extended period of time, right? I think we're more likely to move between 10 and 12K for at least a little while, a few weeks, at the very least, before we can really break out of it and go to a sustainable 14K. But I would like to know what you guys think. Let me know in the comment section below. Also, we do have the premium list, okay? The premium list into the cryptoverse.com. The prices are going up in 9 days. 9 days. So if you want to get grandfathered in at the lower prices, make sure you sign up in the next 9 days. That way you have this crypto community that you can be a part of, and it's at the lower price, right? You're going to be paying the lower price as opposed to paying a higher price. The prices are going to go up quite substantially. So I just want to warn you, if it's not your thing, that's fine. Don't worry about it. Just enjoy the free content. Subscribe to the channel at the very least. But if you do think you would benefit from having access to a premium Telegram chat room where I post my candid thoughts on the market, help you navigate the markets. A lot of people have been really enjoying it so far. The private chat room, there's a private Telegram chat room, weekly premium videos, weekly premium reports. You get access to all the prior ones, which I think have stood the test of time and are still very useful to go look at. So you're going to unlock all of that stuff. You also get access to the risk dashboard, which is how I use to manage the market, right? Trading. A great example of this recently was the dynamic DCA sells we had with Link on the way up. In fact, I posted, according to the moderate risk tolerance strategy, it's going to correspond to having sold 2/3 of your Link position by the time it reached 1850. So some of it was at lower prices, but the highest point was 4/15 of your Link position at 1850. I mean, it was not. It's not to say that I'm telling you what to do. It's just basically saying, okay, according to this risk tolerance, if you're following this strategy, this is what it means. It's not financial advice. You can take it for what you want. But it worked out quite well, right? I mean, 1850, it was not the top, right? We admit 1850 was not the top for Link. It was $20, the local top. But we came pretty darn close, right? And that's the key. It's identifying the fact that, you know what? We don't know where the top is. We don't know what the bottom is, but we try to scoop it, right? We sell on the way up, right? We sell it on the way up, and then when it's back down, we kind of scoop it out, right? So we start dynamically DCing back into the market, and then we try to get it at the lower price, but we don't exactly, it's going to be hard to time the exact bottom. So it's a more systematic approach, right? I think it's a good way to create like a secondary source of revenue. Like if you have a one job, crypto, rather than just have it be this one thing that you hold for 10 years and then you may or may not sell it once. And then if you miss the peak, you have to wait another, 5 years or something. What I try to do is I just try to take advantage of any bubble that forms, and so far it's been working out really great, right? I mean, if something goes up too quickly, there's a good chance it's going to retrace back down. So you use the profits, you buy back in, and then you just continue on up, right? Of course, you have to consider the taxes. It depends on the country you live in, how long you've been holding, and your tax bracket. So it's hard to generalize for everyone, but you have to consider that. But make sure you check it out. You also get access to the dynamic DCA strategy dashboard, where you can calculate your weighted risk on the market with a lot of the different coins. So the main ones we have risk metrics for are Bitcoin, Ethereum, Chainlink, Cardano, Monero, Litecoin, and XRP. I talk about which ones are more probably are higher, have a higher chance of being good holds at various phases during the cycle. So check it out 9 days before the prices go up. You can also pay with crypto for 6 or 12 months. If you pay for 12 months, you get a 15% discount. So make sure you subscribe to the channel. Check out the Telegram channel in the description below. And then let me know what you guys think about the content. And I'll see you guys next time. Bye.